The top mistakes that beginners make in the stock market is what we'll be going over in this video. It's honestly very common for beginners to have made these mistakes. Honestly, everyone makes mistakes in the stock market. Warren Buffett makes mistakes. All the great investors out there make mistakes, but it's okay because you can avoid making those mistakes. So if you watch this video, then you can know how to. I also want to mention that avoiding these mistakes can save you a lot of money long term. But with that being said, let's just get straight into the video and make sure you do hit the like button for the YouTube algorithm and also subscribe for more content like this. Now, the first mistake I noticed, especially during a time like this, where the stock market is extremely volatile, I see a lot of investors putting money in that they are not prepared to lose in the short term. So what I really mean by this is only invest money that you won't need for the next couple of years. Because we honestly have no idea what's going to happen in the stock market the next couple of days, months, or even year. So if you are planning to sell your stocks in the next year or even less, you may want to rethink investing. Because what will happen is, let's say the stock price is down and you sell, you're going to end up selling at a loss, and that's not what you want to do. Because maybe you started investing thinking that right off the bat you were going to make money. However, because the market is so volatile right now, you may end up losing some money in the short term. So an example here, let's say your portfolio is down 20% for 1 month. Now, if you weren't prepared for something like that to happen, you might want to start selling. But I'm going to tell you, the last thing you want to do is panic and start selling. Remember, when you're investing for the long term. So sure, maybe your portfolio is not doing so well short term, but you're thinking ahead. So maybe in 2-3 years, how is your portfolio going to be doing? So to emphasize on this again, don't do anything you're going to regret. Do not sell. That's the worst thing you could possibly do. If you don't panic and just hold, it is likely that your portfolio will go back up again in the long term. The next mistake, which is probably the worst thing you can do, which I notice a lot of new investors make, is investing in a company that they don't actually fully understand. And to me, this sounds more like gambling. And I do understand that it does take a lot of time to actually research a company and figure out whether or not you want to go in and invest in it. I also realize that it's so easy to just go on YouTube and search up what stock should I buy right now. There is nothing wrong with watching some YouTube videos and just kind of getting someone else's opinion. However, you need to make sure that you don't just invest based off of that person's opinion. So if you agree with the person, let's say after watching a YouTube video, then your job next is to actually go out there and do your own research on the company and figure out if you actually want to invest in it. So my recommendation for beginner investors always is to just research companies that you're already familiar with. For example, Starbucks or maybe Facebook or Google or whatever you already kind of are familiar with. And another great way to research a company is to visit the investor relations page. So let's say, for example, you want to invest in Apple, maybe you want to invest in Tesla. All you need to do is go on Google, search up Tesla Investor Relations or Apple Investor Relations. The first link that pops up will take you to the page where you can read something called the 10Q and the 10K. After reading both of these, you'll definitely have a better understanding of the company. You'll be able to see the risk versus reward and kind of figure out whether or not you want to put your money in the company. Also, I want to mention that when you are investing in a company, you also want to make sure that you understand the company's business model. So if you want to invest in a company and you're having a hard time understanding what their business model is and really what they're all about, then you probably don't want to invest in that company. And sure, there are some safer investments out there like the blue chip stocks. For example, Facebook, Apple, Amazon, and Microsoft. And sure, those are safer. However, you still want to do your research on those companies and just figure out for sure if you want to put your money in them. And I'll be honest with you guys, I made the biggest mistake when I started investing. I put basically all of my money into Tesla without really even understanding the business. The reason I put all my money in Tesla and not any other stock was because I had people tell me that Tesla was going to skyrocket. And without even doing my own research and just figuring out if I actually believe in the company, I just went ahead and trusted those people. Now imagine if Tesla actually went bankrupt and didn't do well and I lost all my money. I wouldn't have even understood why I lost all my money. So that's why it's really, really important to always make sure you understand the risks involved when investing in a certain company. Now, the next mistake I want to talk about in the stock market is over trading. Essentially, what this means is that you get into a stock and get out of it really quickly. So let's say you buy Apple stock tomorrow and then 2 months later you sell. So keep in mind, when you're investing for the long term. At least that's my perspective on things. For example, when I buy a stock, I plan to hold that stock for the next 2 or 3 years and even more. Now, if you are someone who just wants to make money in the short term and you don't want to hold stocks for a long time, then you probably want to look into something called swing trading, which I honestly don't recommend for beginners, but you can still look into it. So for example, if you put $1,000 in Delta back in 2009 and you sold that stock in 2019, it would be worth $6,000. So for me, that's appealing, and as a long-term investor, I am looking for those long-term gains. So to summarize, if you are investing in the stock market, make sure you're investing for long-term gains so you don't sell too early because you could be missing out on a lot of money. Now, the next mistake a lot of beginner investors make is not diversifying their portfolio. This basically means that you put most of your money in one company. This is exactly what I did when I first started. I put almost all my money into Tesla. The reason that this can be a horrible idea is because you're putting all of your eggs into one basket. For example, let's just say the company goes bankrupt and you put maybe $10,000 in that company. That's it, you just lost $10,000. But let's just say you use $10,000 to invest in 10 different companies. If you end up doing this, there's less risk because your portfolio isn't dependent on the performance of just one company. So if 3 companies aren't doing as well and the other 7 are, then your portfolio will be kind of balanced out. So just make sure you're always looking into diversifying your portfolio and not just putting all your money into one stock. Alright guys, well I really hope this video helped you in some sort of way, and I hope that it also helps you not lose money in the long term. But with that being said, thank you guys so much for watching, and until next time.